In a little bit, we'll get into the story about these reasonable fiat US dollar price projections for silver and gold respectively by Q4 2025 next year. But first, we need to remind everyone, old and new here, that gold is leading silver into a new price value discovery era, and today's price breakouts is simply further evidence of that. We'll take a quick look around the precious metals universe to see that statement in action. Lots of people in the gold space were understandably excited to see gold in fiat Australian dollars break a new nominal milestone beyond 4,000 an ounce this week. Yet in gold-silver price action, what is far more important to note of this news down under is the following. Silver spot price in today's fiat Australian dollars is now no longer nominally priced below its once much stronger 1980 and 2011 nominal silver price high levels. Silver in Australia has broken out clearly in spot price, and that phenomenon is going to happen all around the Western world in soon enough time. And yes, $4,000 an ounce gold in Australia, psychologically conditioned by fiat currency units, indeed sounds like a lot. But when we examine their full fiat currency era gold price on a logarithmic price chart that treats percentage gains as the balance, we are left to see a gold bullion bull market simply doing its typical thing, up and to the right, slowly and steadily. This is Australia's silver spot price chart throughout this full fiat currency era, also in logarithmic format, starting in 1970 to today in 2024. Again, it is only beginning to break out in spot price beyond 1980 and 2011 nominal price highs. And today's fiat Australian dollar is way weaker now versus way back then. Looking over at our neighbors up north in Canada, gold is again leading silver toward its seemingly ancient 2011 and even higher once 1980 nominal price highs. Here's a recent example of how that looks on the ground in Canada. The way this global secular bullion bull market is setting up, it would not surprise me at all to see that 10-ounce silver bar on the right-hand side priced at 4 digits in fiat Canadian dollars before this decade times out. In further evidence that gold is beginning to assert dominance globally, Bank of America analysts made headlines this week stating that gold is, quote, last safe haven, as U.S. Treasury bonds face risks from soaring U.S. debt now and to come. Bottom line, the typical $3,000 an ounce gold call for next year, and more importantly, stating that traders and central banks who have been record-sized gold bullion buying spree the last 3 years, they state they should increase exposure to gold. Private clients of Bank of America have been net sellers of U.S. Treasuries in record size the last few years, as reflected by net outflows of late on this chart. Nick Lard of GoldChartsRS.com published a few excellent big-picture gold charts this week. One of the most important ways to weigh how far the global gold bullion bull market has to go is by simply measuring gold's ongoing price and value, re-rating higher versus outstanding full fiat currency notes and digital holdings outstanding, debasing, and devaluing. This chart shows the full fiat currency era in which 90 of the largest nations in the world have blown out their full fiat currency supplies markedly higher than gold has revalued higher since the year 1970 began, back around $40 an ounce gold in then US dollars. Global M3 levels are in full ramp mode higher again, so it's no surprise gold is steadily accounting for the increasing fiat currency supply injections. Estimated gold Evermind has a net market value of nearly 18 trillion at the moment, and while that sure sounds like a lot, fiat M3 currency supplies of the largest 90 nations of the world have issued nearly 140 trillion in unbacked out-of-thin-air fiat currencies to date. If we simply perform a ratio between global gold value versus fiat M3 currency supplies outstanding, we can see this dead cat bouncing downward sharply at the moment. Now, I personally bet my hardest-earned savings that before this secular bullion bull market peaks out in escalating values, this chart's going to dip much lower than the 2011 levels and likely back towards lower levels reached during the last 1970s, 1980 gold bull market era. And while fiat US dollar bulls are proud of recent relative strength in the fiat US dollar versus other devaluing fiat currency units, note that both silver and gold spot prices are undeterred by recent fiat US dollar strength. What happens with silver and gold when the still dominant fiat US dollar goes into a prolonged secular bear market ahead? Stick around. On the other side of this break, we'll look at silver and how its price broke resistance this week, finishing higher than this earlier today price chart shows. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
Make some room in your safe because a whole lot of silver could be coming your way. SD Bullion's Monster Box Sweepstakes is back, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a Monster Box for the first time ever. This stunning silver coin is a highly detailed masterpiece featuring a hidden inscription on one of the tree branches that changes every year. So put on your best flannel and become one with the forest, and take your shot to win 500 silver trees from SD Bullion, because someone's gonna win it, so why not you? Click the link below for your chance to win.
The spot silver and gold markets ran higher this week. The spot silver price closed over $33.71 an ounce bid, and such strength suggests there will be more to come. The spot gold price finished the week priced over $2,721 an ounce bid. The spot gold silver ratio plunged on relative silver strength over gold today, marked down to a still historically high level of 80. I'm seeing industry speculation that silver spot price surge today was brought on by large volume short covering. For my fellow patient long-term silver bullion bulls out there, these spot prices are still relatively dirt cheap and nowhere near where this market is destined in repricing higher. And for gold-silver ratio arbitrage hopefuls out there, I hope you aren't running out of square footage. Today's spot GSR of 80 is still at nosebleed levels on a historical basis. Having lived and worked personally through the spot GSR plunge down to 30 in April of 2011, 33 to be more exact, I remain convinced that this is not the low of the building silver bullion bull market mania phase to come. I think we'll probably go below 30 before this goes to its peak. Now turning to probably the news of the week. The LBMA had its annual conference this week. The attending delegates who work in the precious metals physical and derivatives complex, mostly in derivatives, were asked what they thought the spot gold and silver price would be next year's meeting in October 2025. Well, their guess is near 3,000 an ounce gold, which is typical. That's basically up another 10% from these current levels. But in terms of the spot gold price's annual percentage gain or loss in the 21st century, gold this year is up over 30%. And that is only matched by 2007's gold price performance in fiat US dollars. Basically, it shows you that gold has done extremely well this year, and it's on par with 2007, the highest in the 21st century. LBMA conference delegates also had an average take on spot silver price, stating that this time next year, $45 an ounce silver. Now, a back of the napkin gain for silver of around 36% from here to there, if their guesses prove accurate. Now, 4 times already in this 21st century, silver has outdone such a positive annual price percentage move higher. Of course, we'll see a year from now. Turning to CNBC India for more on gold and silver this week, have a listen.
I'm looking at the gold prices because there's no stopping this one. We're trading at yet another all-time highs in the Asian markets right now. So 2709 is an all-time high. In the early Asian markets, we saw 2700 takeaway. And since then, it has been a $16 to $17 of a jump up that you can see in case of gold prices. Well, 2685 for some time has been a very stiff resistance, but that got taken off very easily in the overnight markets there. So above 2700 there. With this, we are up by nearly 2.5% for this week. We are up 5% on the month. And for this year, we are up by 30%. The gold clearly is outperforming various other asset classes and many other commodities as well. And with 30% of gains, gold is giving you the best yearly gain in 14 years now. That's the kind of strength we've seen on this one coming in. Silver as well, not too far behind because we're looking at stronger gains onto that one as well. The support for the gold prices comes in from the fact that the European Central Bank for the third time yesterday cut rates by 25 basis points. There are more banks coming in, and you are also anticipating US Fed to cut cut interest rates by 25 basis points in the month of November. Going forward, it also is going to be about the uncertainty over the US presidential elections. When you pick all of those years, as and when there is US presidential elections, we have seen gold prices gain. And this time around, the uncertainty is just way too much. And then it also is about the geopolitical tensions. The war in West Asia has been adding premium to prices. The global central banks have been buying gold. And it's not just India which is buying gold right now in the physical sense, but the global funds on funds, ETFs, all of that also seem to be accumulating a lot of gold. The Western world actually is buying gold for the first time in a decade, the kind of way they're buying it. And then when you look forward, the forecast for the gold prices is much higher. Bank of America, Citi, and the LBMA meeting that just got concluded, all of them believe that $2,950 to $3,000 an ounce in the first quarter of 2025, if not earlier, is where you could be looking at the gold prices headed for. Silver also has continued to gain. Silver actually has outperformed gold with 34% of gains in this year until now. And the overall industrial metal as a pack also seems to be doing well today. On a week-on-week basis, we're still in the negative, but on a month-on-month basis, quarter basis, and YTD basis, we are positive for many of these base metal prices. And cementing those gains right now is the Chinese data. The third quarter GDP numbers coming in better than what the street was anticipating. And not just that number, when you look at the industrial output, retail sales, employment data from China, all of that has come in on the better side. So perhaps the China stimulus seems to be showing into numbers, and that has added some support to base metal prices. 0.5% to 2% of gains across industrial metals as well.
India's September imports of gold bullion were strong at over 80 tons, or just over 2.5 million ounces of gold imported in September 2024 alone. Her imports of silver bullion last September were over 30 million ounces in that 1 month, nearly half of which came out of China. About 1/6 of it came out of the United Kingdom, with about 5 million ounces flowing. London and futures exchange silver stockpiles continue dwindling. And given the last few years of ramping solar and industrial silver demand globally, and it's probably not going to stop anytime soon, we're not yet at the point where the average Westerner on the street is not even interested in terms of silver as an investment. So they have absolutely no clue of what is currently building for silver below the record gold price surface. That's going to be all for this week's SD Bullion Market Update. As always, to you out there, take good care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.